It is no secret that years ago, we welcomed a currency that didn't require physical cash and allowed the transfer of money safely in digitally encrypted data. And what is it? Without a doubt, it is cryptocurrency. Organized in a blockchain manner, cryptocurrency ensures selling and buying in ways out of harm. However, it is not without its challenges. Waiting for a return on cryptocurrency might be quite uncomfortable. Are you tired of just holding onto your cryptocurrency and not seeing any return on your investment? Ready to give up on investing in cryptocurrency? But what if you learn that there's a bridge between the digital assets of investors and borrowers? With crypto lending protocols, you can now earn passive income on your digital assets. So what are crypto lending protocols? These innovative platforms match borrowers and lenders, allowing you to lend out your cryptocurrency and earn interest on it. Not only do crypto lending protocols provide a new avenue for earning income on your crypto holdings, but they also make it easier for borrowers to access cryptocurrency without having to go through the time-consuming process of purchasing it on an exchange. Discover the exciting world of crypto lending and start earning on your digital assets today. Watch this video till the end to learn how crypto lending is holding this bridge. But before you learn about lending protocols in crypto, pay attention to the big red subscription button. As soon as you click it, you will be taken to the wealthy side, the life you deserve, where you'll find hundreds of videos. These videos contain the answers to almost any question you may have. There are also daily updates, so if you want to stay tuned, remember to turn on notifications. Wouldn't you love to earn your income through your crypto investments? Let's explore in detail what a lending protocol in crypto is. In simple words, in exchange for regular interest payments, the process of lending your cryptocurrency to the borrowers is what is called lending in cryptocurrency. As mentioned earlier, deposited payments will be in the form of cryptocurrency. They will be managed regularly, either daily, weekly, monthly, or annually. The concept of crypto lending is based on collateralization. This may get tricky. This video will explain lending collateralization in cryptocurrency with a short example. It is a widely known fact that Bitcoin is one of the cryptocurrencies. Assume that there are two friends named Can and Carrie. Can have a Bitcoin worth $20,000 USD and needs a loan of $10,000 USD against 12% of interest per annum. On the other hand, Carrie has a worth of $10,000 USD in a stablecoin. At the same time, Carrie is willing to lend it to Can at the rate of 12% of interest per annum and by having one Bitcoin as collateral. This is because lending cryptocurrency is based on the model of collateralization. They both agreed. Once Can pay off Carrie's $10,000 with the proposed interest, Carrie will then return Can's Bitcoin. But in case Can refuse to return Carrie's $1,000, Carrie will have to liquidate Can's Bitcoin. Thus, he can easily take his landed money along with mentioned interest and will give the remaining balance back to Can. This is how lending protocols of cryptocurrency are the safest for Carrie. Can also get a benefit in case he doesn't turn his back. Share your thoughts on crypto lending in the comment section. Before getting into the complexity of types of lending protocols in crypto here, I have mentioned a few significant points of why should you go for crypto lending? With the new trend in finance, crypto allows you to stay in the market of cryptocurrency. Payments are processed in a fast manner and can be made instantly. There are very few restrictions for transferring money. Most important of all, you can set your payment schedule by your choice. There are very low risks of investments if you go through the lending protocols of cryptocurrency. The gains of cryptocurrency are not limited to only the above-mentioned points. Rather, there is a long-lasting list of their fringe benefits. Let's step forward to its types and how to process them. What do you think about its types? Like, will they be similar to our banking or not? Perhaps it might be yes, or it might not. Just like our hometown banking systems, interest rates of crypto vary from platform to platform and require regular payments. But on the other hand, unlike a commercial bank loan, loan terms in crypto are short to the extent that they may vary from 7 days to up to 6 months. An interesting point to add is in cryptocurrency. You can change your interest rate hourly, or your lender may offer you indefinite credits. Decentralized crypto lending and centralized crypto lending are the two leading types of crypto lending, along with collateralized crypto loans, flash loans, and many others. Wait, there's something extraordinary to add. Haven't you wondered about which rule blockchain in an ecosystem is based on? Enjoying till now? Please hit the subscribe button now, like, share, and comment, and yes, keep watching. Blockchain works on the rules implemented by algorithms and sharp contracts to ensure that transactions are autonomous, either through centralized or decentralized lending protocols in cryptocurrency. Blockchain is making its way to disrupt the loaning system of peer financial organizations and many banks. That's all because the main theme to launching lending protocols in cryptocurrency doesn't rely solely on a streamlined relationship between borrowers and lenders. I am pretty sure that you have now understood this video's main idea, which revolves around lending protocols in cryptocurrency. Why not get a few of its types and then its subtypes? Behold! First, bat your eyes on the impending difference between centralized and decentralized financing. The main gap between the two of them depends on a set of protocols or financial institutions, and their transactions are held by whom? Let's walk through their features. Centralized lending protocol. Have you heard about Know Your Customer protocol? Answer your comment in the chat box given below. If you are familiar with this term, then you already have an understanding of the centralized lending protocol because it is based on this very concept. Centralized financing is typically playing the role of middleman in cryptocurrency. That's because it is concerned with all the verification of users. They are further known to manage the user's onboard processes. Now the question is, how are they working to attract users? A centralized financing system is trying to catch users' attention by offering pliable terms, or by providing high interest rates to all investors, borrowers, and lenders. I will also want you to know about some examples of centralized lending. They are Celsius Network and Hodlnaut. They both share their parts in offering financial services to a large network of users. With connectivity access, users can easily transact their crypto assets, and private institutions handle this. Haven't you noticed that centralized crypto lending is somewhat similar to traditional finance institutes? That is the reason why centralized financing is called a crypto bank. Keep watching the video to learn more about the exchange protocols of centralized financing for accurate understanding. Being the most frequently used exchange system for buying and selling, centralized crypto exchange provides multiple services by offering account services, crypto trading platforms, and support services for customers. What facilitations does centralized exchange protocol in crypto provide? Centralized exchange protocol assists its transactions by providing online trading protocols and handles all through an order book. Stick around. Haven't heard about the order book? No worries, its perks are quite exciting. The order book is an accumulation of orders entered by both buyer and seller traders in an organized manner. Centralized lending protocol and its exchange programs are all about matching all the orders from both traders, thoroughly clearing its counterpay for both individuals, disposing of the custody of the exchange program. Let's reach out to decentralized lending protocols in cryptocurrency. Decentralized lending protocol. The decentralized protocol is a kind of new financing that is determined by cryptography, contracts, and open blockchain used by anyone in public. Money transfer is the main building block of any finance, but finance is not limited to sending or receiving money. Rather, there are many other services provided to users. As the name suggests, decentralized exchange protocols don't require any central authority. In addition, unlike the centralized lending protocol, which is based on Know Your Customer, decentralized exchange is based on do-it-yourself. Confusing? See it this way. When we come across managing money or lending or borrowing transactions through a set of codes or small contracts, it's about decentralized lending in cryptocurrencies. Moreover, the answer to the most transparent lending protocol is undoubtedly decentralized financing. Why does decentralized protocol matter? If a company uses the decentralized lending protocol in its cryptocurrency, all of its entities will have access to the shared view of data and a real-time database. Have you a bit of an idea for a decentralized exchange protocol? With no need for a central bank or custodian, the decentralized exchange protocol has allowed users to continue trading based on their contracts. In decentralized financing, there is no need for borrowers and lenders to submit their identification to an institute. Rather, they both are allowed to make contracts in a permissionless manner. How can one benefit from this concept? This financing protocol is thus accessible to everyone without holding their assets to anyone else. The question that now arises is, how did decentralized exchange protocol manage to do all? Let me make it easier for you by explaining AAVE and Compound, the two main types of decentralized exchange protocols. They both perform by creating a marketplace for lenders and borrowers. In creating this, they omit the need to hand over his funds to another. Through this money marketplace, both lenders and borrowers make small contracts. Lenders deposit their funds in that marketplace and get a substantial percentage of interest along with another token representing the coin he has added to that marketplace. At the same time, the fund deposited by the lender will be available to the person who needs them. The borrower will then get that amount and will have to submit his coins as collateral in the same marketplace. Hence, the decentralized lending protocol is all about over-collateralization. A real-world example of decentralized lending. To track the international lending payment system, a US-based institute named Contura Energy has installed the decentralized protocol. In a nutshell, in this lending protocol, users can easily access their database entered on a public or open blockchain. Since Bitcoin is not controlled by any government or any central financing authority, it is known to be the most decentralized cryptocurrency. Did you enjoy the video? Please hit the subscribe button, like, share, and comment.